Welcome to the Victor H Investing live stream. It is July 30th, and it is a big week for earnings. We had a big day today for earnings. We had several big companies announce this morning, and after hours, we had big companies, the biggest one being Microsoft that announced. So I wanted to go over the companies that have been announcing today primarily, and see how those companies are doing, see if we can see something in the earnings that caused either the stocks to go up or down, and kind of see where the table's being set with regards to the rest of the earnings that are coming. We have more earnings to go. Today was huge. I mean, the number of companies that I'll show in a minute, it was just, the list is so long, and it's hard to fathom that tomorrow we've got a pretty good list ahead of us. And then we got Thursday, which is going to be huge. Apple and Amazon on Thursday. And then on Friday, we have the energy complex announcing. So it's a huge week. And if anything, it's super interesting. And I love it. I love investing in stocks. And it's weeks like these that really, when things move, it becomes super interesting for me. And I really enjoy it. So let's get into it. And I see people are already on. Thanks so much for joining. I've got a list of companies I'm going to go through, but please, as always, put in comments, ask questions, suggest a stock that you want to take a look at. If we have time, we'll take a look at it. But let's get going. Shadow Guy, thank you, sir. Thanks for coming in. And it is great to see you on the live stream. So real quick, the NASDAQ was down today, and it was kind of a weird day. Yesterday, we had some earnings, and today we had the NASDAQ opened a little bit higher. It kind of was a little bit lower, and then it sold off, and then it came back again. And I think that means investors are, a couple of things is there's concern, there's fear, and people are rotating out, maybe going into cash and just playing it safe. Because if you're sitting on really good gains, maybe you do want to put some money into cash, and if some things sell off, you don't get as hurt as much as if you were completely invested. That might be happening, especially as they rotate out of technology and big caps. The number one, sector of the day was energy. That was interesting because oil has been selling off. Financial services is still going strong, man. That's pretty cool. Year to date, it's up 15, 1 year, 23. Go financial services. And then we've got other industries there. Now, I see Sergio is on. Am I going to talk about AMD? I am absolutely going to talk about AMD. So hang tight. That's probably number 4 or 5 on the list, because I'm going to start with Microsoft. That's the big, gigantic company. So we'll take a look at AMD. All right. So the companies reporting today were Microsoft being the biggest, $3 trillion market cap. Then we have Merck, Pfizer, AMD. We've got Starbucks, and we also had PayPal, which had a very good day. PayPal announced in the morning, which is kind of weird because they're a California company, but they announced in the morning. I guess they got up early. So let's take a look at the first company up to bat is going to be Microsoft. And Microsoft announced after the market closed. And the company, in essence, and we'll look at their earnings in a minute, they came in pretty close to their expected results. Now, a couple of things came out of the earnings that I think may have triggered some investors to be more fearful of Microsoft. So let's take a look. So overall, Microsoft is gigantic. They're selling off 6%. And if you look at the 1 month, this is the negative 6.68%. It does not include this minus 6% in after hours. So if you include that, you're down on Microsoft about 12%. So there's been a sell-off in Microsoft for the last 30 days. For the year to date, it's up 13%, so soon to be 7%. And then for the 1 year, 26, which FYI, that's a great return on a stock, but it's not setting any records, of course. So when we look at their earnings, a couple of things that I'm going to point out. So I'm going to jump right into my favorite financial statement, which is the statement of cash flows. and their cash from operations was phenomenal. $108.5 billion were generated in the 12 months ended June 30th, 2024. That deserves an applause. Good job. Good job, Microsoft. The only problem is that the acquisitions of plant, property, and equipment jumped substantially. It went from 28 billion to 44 billion. Now, that I think is causing fear in investors. If you recall, when Meta started putting a lot of capital into the metaverse and other things, investors were like, whoa, pump the brakes. Why are you spending so much money on the business? And I think that may be one of the ingredients that's causing fear inside the Microsoft stock. That's one biggie. The other biggie is their cloud business is probably the most important part of their business. And the cloud business contracted or didn't grow as expected. It underachieved on the growth rate. And that was kind of a big item to miss on for two reasons. One, their cloud business is super important. Two, the whole AI thing is supposed to be huge and it's going to be worth so much darn money and so forth. If it is, your cloud business should be like just overwhelming us with positive news. Instead, it underwhelmed investors. I think those are the drivers why Microsoft did not do very well after the quarter ended. If we look, and we already looked at the stock, but just to kind of recap, from the high point, Microsoft is down 9.55%. And if you include the -6 from today, from the high point, Microsoft's down 15% plus. So a very corrected stock, so to speak. Now, I did do a valuation on Microsoft, and I do have it ready to go. I updated it. I did my homework. Make sure you tell my math teacher that I did my homework here on Microsoft. Let me load it up, and then I'll move it over to our screen. So, so here is the valuation on Microsoft. It's a great company, so a very low discount rate of 7.5%. I updated the free cash flow based on the free cash flow that we just looked at. It just generates tremendous cash flows. But even with that generation of tremendous cash flows, once you discount those cash flows, because you don't get all that money all at once, you have to wait until later to get those years. It really discounts down to 2.3, let's call it $2.4 trillion. I'll add cash, take away debt, and I can get out of the cash flows a valuation for all those cash flows to $2.4 trillion. That is a misconnection, misaligned with the actual market cap. It's overpriced by 19% if I look at cash flows. I've done videos on Microsoft. You can watch those on my channel, and this is consistent with what I've seen in the past. Microsoft is a premium company. It probably should be trading at fair value or maybe a little overpriced. So it's not a big, surprise, I'm sure, to many. Now, if we look at earnings per share, I updated that as well. I give them a generous PE of 36 because it is Microsoft. They continue to grow. They have very good position in the marketplace. And even with those factors in a 10% growth rate, the best I can do is $351 per share. And I used a more realistic share price, which is after that 6% drop. And even with those numbers, I am at a premium 12%. So combined, there's about a premium right now being priced into the stock of 17%. Again, stocks, I think, going into this earnings, for a while, they've been priced to perfection plus some upside surprises. Investors have been like, man, this is going to be great. It keeps getting better. It's just going to keep growing. Here we go. And then Microsoft did their earnings, which were very good. And the stock's selling off. Reminds me of last week with Alphabet, Google. They announced their earnings. They looked really good. 14% growth. Really profitable. Great free cash flow. Sold off. Over 2 days, it sold off 8%. So the market is beginning to be more rational in the valuations of these big cap stocks. And we're seeing two of the most valuable companies to this point, Alphabet and Microsoft, see that investors were going to have sold off their stock. So that is the story on Microsoft. Love to see your comments on the chat. Please put them in there. We're going to keep rolling because I got a long list of stuff to cover, including AMD. Since my man Sergio brought up AMD, we're going to talk about AMD next, but I'd be happy to talk about Microsoft. I'm going to catch up on comments and then get back to you, Sergio. Shadow Guy. PayPal has a New York City office. I get that, but PayPal they were started in California, and I'm sure they have a New York office. That's why I thought it was kind of weird. But they announced in the East Coast, so you're probably right there. Thoughts on SoFi? I looked at it earlier. We could take a look at it toward the end. I don't think it was doing anything exciting, but we could take a quick peek. Dividend investor got Bristol Myers and CVS. I could take a peek at those. Not in the wheelhouse for today, but if we have time, we'll take a peek. I am going to look at Merck and Pfizer, which announced today. So maybe when I look at those, I could do a quick compare against Bristol Myers. Take a look at CVS. I believe CVS was up in part of today's trading hours, but we'll take a look. All right. You agree? I agree on your Microsoft value. It's still overvalued, not going. It's one of those things about Microsoft or Apple or even Alphabet, right? You're buying into a proven leader in their space, proven valuable company. Getting the right price is critical because it's very hard for a company with a $3 trillion market cap to double that valuation. That is huge. I mean, it's so hard for them to go from 2 billion to 3 billion. So that's one thing to keep in mind. The law of big numbers is going to always make it hard for Microsoft, Alphabet, Amazon, all the big giant companies to really move. It's nice to get that sweet spot, kind of like, $50 billion company that's going to move to become a $300 billion company. That's one thing. That's food for thought. And is it Tony Myers shocked Pfizer was not hired today? I'll talk about Pfizer in a few minutes. I agree with you. And we'll talk about how the stock behaved today, because it actually did open up higher, or was trading higher before the market opened. And then I think there's just a little bit of fear in the market. There's a perception I've shared with you for a month and a half that I think the market's expensive, overpriced, especially in some sectors. So maybe some of that wet blanket kind of reached to Pfizer, but I've got a full valuation of Pfizer. I did a video on Pfizer today. I released it this morning. A lot of people saw it. And the conclusion of that is I think Pfizer is discounted, and I think they're set to really do better in the future. Their earnings were really good, really productive for the company. They're beginning to grow again, and their compares are going to be far easier. Overall, I think Pfizer is a good investment for me, and I'm going to keep buying shares, but I will cover that in more detail. And then the last comment before I jump into AMD, I would also like your opinion on Hood at the current price. If I can get to it, I will, but apologies in advance. I had like a 6-pack of accounts to go over, 6-pack of companies to go over that announced today, and that's what I wanted to focus my energy on. AMD up 6.18%. Beautiful. I know their data center business was rocking. It really grew, which is good news for advanced micro devices. The one thing to be realistic about AMD is they are not doing all that great from a stock price perspective. If we look at AMD, it's kind of already corrected. So it might be a stock worth kind of considering and saying, hey, some of this downside's already been played out. You look at it's down 34.5% from its peak that was achieved in March, and it hasn't been keeping up with the rest of the semiconductor stocks. So maybe some of the air has been released out of the balloon for AMD. Now, having said that, when we look at their earnings report, let's take a look at that real quick. So they expect, investors are thinking the GPU lineup is going to change. And I would say that, yeah, AMD is probably going to really focus on accelerated computing and the real high performance computing that is really powering the revenues that from NVIDIA. So that's definitely a space that they're going to do well in. Overall, I've never valued AMD all that high. Let me tell you why is for some reason, they just never generate a lot of free cash flow. The other semiconductors do, but you look at a company like this. Let me make sure that I go over something first. They're a $23 billion company, 23 billion. Well, simple math would be, well, if you can kick out about 10% in free cash flow, that'd be $2.3 billion. Okay, so remember that number, 2.3 billion. But when we look at their free cash flow, they're way below that. They had a couple good years in 21, 22. But if I take, let's say, 1.3 billion, and I've got this spreadsheet I created that I want to show you guys. I know that I do back of the envelope kind of calculations. And I did this on Merck, but I'll do it with AMD. And if it's a no growth company, I take their free cash flow, multiply it times 10, and that's roughly where I'm going to land on a valuation. If I think there's modest growth, like it's in the single percentile, single digit, percentage growth, maybe multiply it times 15. And if it's good growth, 10 to 15%, which is where I'm going to put AMD, multiply it times 20. If it's super high growth, like 100% growth, you can multiply it times 40 or 50, depending on how smooth the data looks. In the case of AMD, 1.3 billion is the number, right? So 1.3 billion. And if I multiply that times 20, I'm going to get roughly 2.6 billion, or excuse me, 26 billion. Okay. But their current market cap is 223 billion. So you see where it always falls down for me. I'm like, I can't get anywhere near their market cap. Their free cash flows are nowhere near where this is at. If you look at Broadcom's producing upwards of $20 billion a year. And Broadcom is a younger, newer company than AMD. Man, how does that happen? So I've never been able to price AMD very high because of this factor. What investors look at with AMD is primarily their earnings per share and their growth rate. Now, earnings per share, analysts say it's a strong buy. It's discounted by 43% based on earnings per share. Earnings per share is expected to be $3.54. The company is growing in the right places, and it's going to grow really nicely. But again, I just don't see them generating enough cash for me to be an investor. And you guys know that I'm a free cash flow investing guy. If you don't have free cash flow, the company's probably not a serious investment for me. So I think AMD had a good day. I think they're going to rally, and it's based on earnings per share. So good luck with AMD. I'm not an investor. I don't think I've never invested in AMD, but I've invested in other companies. I've invested in NVIDIA a while back. I'm currently buying Intel. I bought a fair amount of Broadcom, sold it at the end of 2023. And the other recent investment in semiconductor was Qualcomm, which I made money on and sold off maybe a month or two ago, as I felt that the semiconductor space is way overpriced. So AMD had a good day, and we'll see how they end up. Tomorrow is anybody's guess what's going to happen. I think the market at these rates is going to open down, but does it stay down? Does it rally back? I don't know. That's something I'm completely guessing at. All right, so next we're going to go to, let's mix it up a little bit and talk about Merck. So Merck had a bad day. It's down 9.81%. This is another case of the company being really priced high. If you look at Merck over the last 5 years, it's kind of rallied up and it's established a pretty high market cap. And they came in with a pretty good earnings report. And the earnings were fairly good, but they did not exceed, and they barely met, and were a little bit shy on some of the metrics. So I did do a video on Merck, and I'll release it. I think it's going to be released tomorrow. But on Merck, I didn't do a valuation. I did more of a back of a napkin, and we could do that back of the napkin valuation because Merck is easy. We can go and reduce the screen on this so I can have more screen space. And then we got Merck here. All right. So when we look at Merck and we look at their free cash flow, it has a very good cash flow, but the market cap is just really high. I'm looking at the right statement. Cash flow and free cash flow. So they did about 9.1. I'm going to go with 10 billion just to round up. I'm trying to do a back of a napkin kind of valuation. Merck really belongs here. They have good revenue growth. So when I go with 10 billion here, and I multiply it times 20, I end up with 200 billion. But their current market cap is way above that. And it is 291. So it's way overpriced. I just can't get there with a valuation of free cash flows. And I'm going to call it 292. So this one is overpriced. And maybe the market realized it. They're like, wow, this company is doing what they said they were going to do, but the growth isn't high enough to sustain the valuation. And there's a lot of other options in healthcare that are really attractive. Healthcare has not been a sector that has rallied a whole lot. It's actually in a lot of ways really underperformed the rest of the sectors, especially technology and communication services. So Merck had a pretty rough day, and I don't know that it's going to rally much from here. I'm not a Merck stockholder. I'm in Pfizer. So let's go to Pfizer really quick. So Pfizer had a decent day, 2.18. It had really good news because they began to grow their revenue. If you go the quarter that they closed versus the same quarter a year ago, it was quite a good growth. And it shows that the business is now getting sorted out. When we look at their financials, COVID caused the company to basically double its revenues, go from 41 billion to 81 to 100 billion in revenue very quickly. So the market loved that. But then it said, okay, COVID's over. We're not selling vaccine. It came back down to 58. But keep in mind that 58 is far bigger than before COVID. So the company's bigger. They generated a bunch of free cash that's on the balance sheet. They acquired a big business that's now going to begin to sell their product and generate more revenue for Pfizer. So all those things are good. But that earnings that showed revenue growth really showed that the company is on the right path. With regards to the valuation, got to spell Pfizer correctly in order for it to find it. So here's Pfizer. I updated everything already, and it really shows a 27% discount. Most of the discount is generated through the real good earnings per share. They're guiding to that number, and I'm using an 18 PE because they are beginning to grow again. Their cash flows have not come back to their historic levels, but I'm putting an estimate that they're going to be at around 9 billion at the end of the year, and they're going to grow them nicely. So I went with 10%. But overall, I think Pfizer is a good stock for me to buy because it has a lot of upside. And when you look at the charts on Pfizer, man, it's been brutal for Pfizer over the last 5 years. The stock did really well during the COVID years when they discovered a vaccine for COVID, and it didn't See if we can get this to update. There we go. So the stock just rallied up when they discovered a vaccine for COVID, but then this company was just completely sold off. And I showed you that the company's bigger than they were in this era. In this era, they were trading for $38 a share at a high point. Let's call it mid 30s. Well, they're still not up to mid 30s. And the company's bigger, better cash flow. They acquired this big business. I think they're set to grow really nicely. So I really like Pfizer and continue to add shares. I think the best is yet to come. We're seeing a short trend in the last 30 days. They're doing fairly well. Last 30 days are up 11%, and they pay that really nice dividend above 5%. So Pfizer had a really good day, and it was good to see that happen. Speaking of companies that had a really good day, PayPal. Man, this has been, I've been waiting for this for a while. What the heck? The PayPal was trading at $300 a share back in the day. Now it's trading at basically 20% of its high value. Now, it was probably priced way too high. I would have to agree with that. But now we're seeing that the stock's beginning to move. Extreme volatility in PayPal. People just don't understand, what the heck do I do with PayPal? But the reality is the company's been growing their revenues. They've been generating free cash. They continue to grow the transactions on their network. Well, that's really good. They have strategic businesses like Venmo. They're creating their own cryptocurrency. They are a very good international play because they really help with transactions that cross country borders. So all those things, added up, I think it's a very good business. And PayPal had a very good day, up substantially. And I think it's set to, maybe people have now noticed PayPal and they'll start investing in it. I've been an investor in PayPal for a little while. I think I'm still sitting on a loss, maybe by 2%, but I have, $40,000, $50,000 invested in PayPal. And I've been kind of waiting for the market to kind of wake up and say, PayPal is not this terrible. It's like, why did it sell off, by 80%? It's not that bad of a company. I can understand that it would sell off by 30 or 40%, but I think it's overdone. There's probably going to be good value achieved in PayPal through appreciation of their stock price. The other last thing on their earnings that came up was that they bought back $1.5 billion of shares, which is a pretty good number of shares if you take that into account. Their cash balance is really good. All things look good for PayPal, especially the market, acknowledging on a day when the stock market was down, PayPal really stood tall. So it was good to see that. Go PayPal. It was up 8.59% on a day when the NASDAQ was down 1.28%. So that's a very good day for PayPal. I was really glad to see that. All right, so we chopped through PayPal. Let me catch up on some comments here. So AMD with a nice pop after market with good news regarding AI chips, should be heading towards 180. You might be right. I think AMD has always been a growth story, and investors in AMD, really invest in it based on its earnings per share. If it has a solid business around AI chips, that can definitely be a catalyst. So we'll see what happens there, but that's a very good point. What do I think about Intel? So I'm buying Intel principally because it's sold off, it's discounted, and PC sales are really increasing. I also own Hewlett Packard, the HPQ, and they're showing that, one, PC sales are growing. Two, they're optimistic that PC sales will continue through the end of 2024. When PCs get sold, Intel chips are in those PCs. That's good news for Intel. In addition to that, I think they're completely forgotten with regards to the data center, but I think Intel can really make noise in the data center. I know that they're really trying to get a part of this whole AI, ecosystem. We'll see if they're successful or not, but they don't have to be the leader in order for value to be achieved by Intel. I think Intel is a good play, and that's why I'm buying shares into Intel. I've done a video in Intel. I put it on my channel. You can view that for more details. They're going to come up on Thursday, And I think Intel could really move on Thursday up because let's face it, Intel for the last 3 years, the news has been horrible. If you look at Intel, the stock has just, you know, it's kind of gone toward the ground, so to speak. I kind of showed where PayPal was. Here's where Intel was, and it's down 40%. Not as bad as PayPal, but it hasn't been great news, especially around this time in 2024. It's really cratered, and that's what caught my attention. I'm like, wait, Intel is Intel. They have really good businesses. Why is the market really selling them off? And I think they're set to potentially, they don't have to surprise all that much on Thursday to really rally. They just have to hold their business and show some progress on some markets with some modest growth. And it'll be a little bit like the Starbucks story that showed that, hey, it's not as bad as investors are making it out to be, or PayPal where, hey, let me remind you, we keep growing. We keep, showing profits and free cash flow. If Intel can show a solid earnings, I think it's really going to help their stock. So we talked about Intel. Let's talk about Starbucks and see what happened with our number one coffee producer, or I should say a restaurant in the United States. So Starbucks was up today, and it's up in after hours by 5.74. And the story on their earnings was more about it's not as bad as the market has, made it out to be. Starbucks is Starbucks. It's the number one premium coffee brand in the United States. Globally, it has a very good global business. Yes, same store sales have slowed down, but a part of that is they're opening new stores. So I think that part is, as new stores get ramped up, you need to give them time to really hit stride. So I'm a buyer in Starbucks just because the market decided, hey, we're going to sell off Starbucks. And I'm looking at it being a premium brand. It has a nice moat. There's only one Starbucks. There's only one leader, and it's Starbucks. And the difference, or I should say, the number one player, Starbucks, and the distance to their number two player is a big distance. There's no close number two. It's not Coke and Pepsi. It's Starbucks and then nobody else. There's local donut shops. There's Dunkin' Donuts, but you can't really call that a competitor. It's a different experience, different level. You have companies like McDonald's wanted a part of the business that Starbucks has because it's so darn lucrative, and they couldn't pull it off. So Starbucks, I think, was sold off so much that it really attracted my investment dollars, and I'm glad I bought it. We'll see if they can keep that gain of 5.89% tomorrow. It'll be interesting. Now, they didn't grow. They actually pretty much were flat on revenue. Their same store sales were down like 3%. Overall, operationally, they did cut costs, which was good. But I think that investors were fearing worse. And when the story wasn't as bad as they expected, that's why the stock is rallying. People are reminded this is the number one coffee brand in restaurants. So why not own the number one player? So that's my reasoning why I invested in Starbucks. All right, so let me catch up on some comments here. We went over AMD. We've got SoFi, Bristol Myers, CVS, and Hood potentially stocks to take a look at. Hey, Zach, thanks for the comment. I really appreciate you saying that. And I really hope you get value out of my videos. I enjoy doing them. They do take a lot of effort, and you showing appreciation really means a lot. Thank you so much. All right. Starbucks is also a big coffee roaster. Yep. If you go inside of a grocery store, you're going to find a lot of Starbucks product that they sell. Like I have a Keurig. You could buy Keurig cups, and Starbucks is making money. They sell coffee on the shelf. They sell their coffee to other restaurants who then sell it. It's a very profitable category, coffee. It has very good margins, and it is another side benefit of Starbucks. So let's take a look at SoFi. So SoFi, I believe they announced, and let's take a look. So today they were up 1%, and I really didn't read anything on their announcement. So let's take a look. So So I think, SoFi, the story I've heard from them, it's a pretty ambitious story, and all those things, are interesting to hear. But when I look at the story and I go, okay, what's your scale? Okay, they're from an income statement perspective, they're a $2 billion company. Very good growth. I would give them that. And looking at revenue, here we go, revenue. So a $2 billion company, the growth has been good. Okay. But at their level, I mean, they should be crushing this number. In financial services, 2 billion revenue is like nothing. It's like that's like 1 week at a big financial services company. So I don't know that they're growing enough, in my opinion. I think they're growing, which is interesting, but they are. What's their valuation? They're an $8 billion company, and I'm going to compare these guys to one of my favorite companies, Robinhood, because I think the two companies were somewhat, new companies around the same time. So SoFi, they're $8 billion company. They have $2.3 billion in revenue, and their forward P is 67. Okay. I don't think they make money this year. So that's why you don't see a PE there. Their growth, as mentioned, is good, but it's not like knocking me out of my chair because it's only a $2 billion company and they're only growing at 36%. When we look at cash flow, are they burning or making cash, free cash? And I think the answer is they're burning cash, but let's take a look. Yeah, they're burning a fair amount of cash. I think something is in there that is consuming a lot of cash. As interest rates go down, that's going to be good for SoFi because they don't have to pay as much when they borrow money. I'd really take a look at their balance sheet because you're going to want to make sure that they're a very well capitalized company that's not going to get into trouble. But overall, whenever I've looked at SoFi, it falls short of impressing me. I just don't see enough for me to go, wow, that company's awesome. On the other hand, when I look at Robinhood, the difference is, Robinhood is now $18 billion market cap. If we look at their stock, it was flying high way back here when, all the meme craze and so forth. But over the last year, it's up 60%. So buying at the right time is key in these stocks. And I invested at the right time. So I'm doing really well on Robinhood. Forgot to show the graph on this stock here. And it's similar graph there. Over the 1 year, it's down 33%, while Robinhood is up 60%. Now, Robinhood, the things that I like is they actually, I believe they produce free cash flow. And am I looking at the right? Nope, I'm not looking at the right statement. Let me look at the right statement. Cash flow. All right. Free cash flow. You see, they generated good free cash flow there. It's been somewhat up and down, but I tracked the reason why this was down substantially is you had the sell-off of stocks and crypto, and that caused some loss of cash. But then once they got out of that dip, they started coming back. And when they produced that free cash flow, that's what ignited the rally in Robinhood, and it's really been doing great. Not only that, so they produce free cash flow, awesome. Let's take a look at growth. Big growth number, and this company producing free cash and growing at the same time looks great. Crypto has really been a part of their business, not the whole thing. Their primary business is they're a stock brokerage company for the new generation investor. And they do that really well, better than others. And that's why I think they have a moat, because if you say, hey, who does it better for investors that are under 30 years old? I think Robinhood is near the top of the list. I think the traditional brokerages, they kind of wrote their apps for the 60-year-old, the 70-year-old. And frankly, that just doesn't make a lot of sense for the younger investor. Younger investors grew up with iPhones in their hands, computers, and so forth. So Robinhood really appeals to that younger investor far better. So they're cutting out their part of the market just to really dominate in that space. So Robinhood's done a lot better. I think the story on Robinhood is more realistic. They have specifics that they've really become the best at. Where SoFi, in my opinion, they're trying to like replace things that don't have a ton of value. If they go after banking, I don't know that banking has a ton of value and other businesses, but I've never been a SoFi investor. Every time I look at it, it doesn't convince me, but I'm glad that I bought Robinhood. So those are my comments on SoFi. Hopefully you found it interesting combined with Robinhood. Does Robinhood have more upside? I think it has a little bit more upside. I continue to buy shares because I think it's the leader in that younger investor category. It has really bright people that are just constantly creating new businesses or new forms of revenue for the existing businesses they have. So I really think that they continue to expand their moat and make it stronger. So that's why I continue to buy shares in Robinhood. All right, so next one is going to be Bristol Myers. So we looked at Bristol Myers, I think, in the last live stream this weekend, and Bristol Myers was pretty much flat. Over the last year, it's up. No, it's down 21%. Year to date, it's down 4.66%. It's a nice dividend payer, but I would, ask the question, did they announce, let's see, did they announce today? No, July 26th. So they announced last week, I guess. Yeah, last week. And what happened last week? Let's see. So they did have a bump up. So go Bristol Myers. They had a nice earnings and they kept that gain, which very good. I think healthcare was really depleted. Healthcare, hadn't been rallying over the last couple of years. And you could see that Bristol Myers was right there with the rest of the healthcare space, not doing very well. So now we're seeing a rally in Bristol Myers. Not a bad idea. I think it's a good company. I always look at Bristol Myers and I could definitely see that we can probably get to a value near it, because if I recall correctly, they produce really good free cash flow and are consistently profitable. They have about $13 billion in free cash flow. And if we multiply that times 20, we'd get to like 260 billion. So you could see that you could probably get a pretty good discount. Now, 20 may have been too high depending on their growth, because they haven't been growing a whole lot. So maybe multiply times 15, which would get me maybe to about 200 grand. And it would be a reasonable, I should say 150 billion or so. So it would still be a nice discount. It's just about, when I look at Bristol Myers, I don't see a lot of excitement in their portfolio. That's just me. But when I look at Pfizer, they acquired a couple businesses where they're really going after certain cancers that I think are going to be real big catalyst and really be big game changers for the positive with Pfizer. That's what excites me about that business. So I get a 5% dividend out of Pfizer. It stands to really change the valuation. If those businesses work, that stock's going to double or triple over the next 5 years. And I'm excited about that. I don't know that I feel the same way about Bristol Myers. I think it's a really good stock. I think it's a good stock to own, but it's not the stock that I own. I picked, Pfizer, and I don't like owning too many of one. Pfizer and Bristol Myers are kind of similar. So those are my comments on Bristol Myers. CBS is a stock that I do own. And man, like the case of PayPal, I just don't understand the market sometimes. You see this drop, a just significant drop in the stock price. In the last year, it's down 15%. So you'd expect, revenues must be going down. No, they've been growing their revenues every single year. Geez, the market's crazy sometimes. So the company keeps growing the revenue by 10%. It's already a massive company, $356 billion of revenue, and they grew it by 10%. That's phenomenal. That's $35 billion of growth. Well, the stock's down maybe because they're unprofitable. No, they actually produce a good profit. Okay, well, maybe their cash flow is bad. Nope. Cash flow tends to be really good. Cash flow is consistently at a good level. So good cash flow produced. CVS. Now, why am I excited about CVS? So CVS is trying to integrate multiple businesses within healthcare. And they are, CVS is best known for being a pharmacy, a retailer. And that business, frankly, generates really good cash. But what they're trying to do is extend that and make it, not only is it going to be retail, they're going to have nurse practitioners and physicians. So you can go in there for a doctor's appointment, or just like the simple things that you would go to an urgent care or family doctor for. You can go to a CVS, so they can really broaden out and get more wallet share of that customer or patient, as we call it. The other thing too is they became a healthcare payer by acquiring a health insurance company. Again, they're trying to get more of that ecosystem of the healthcare business. And if they pull that off, I think they're going to really change the valuation of their business. Now, to this point, I think the market is not believing in it. I'm an investor. I don't have a ton of money invested in it, but I continue to buy shares on down days. And I haven't kept up with their earnings release. It looks like August 7th is when they are going to announce. Every earnings is important to look at CVS. If they just continue to be on track of growing their revenues, keeping really good free cash flows, operating and executing their business plan, I'm going to continue to buy shares. So I'm going to go with the fundamentals on CVS and continue to buy shares, because at some point the market's going to recognize it. Analysts think it's a buy and it's discounted by 20%. I believe I have a higher discount. Let me, the stock price is $63. I mean, the $63, I believe, was the stock price. So it's still a pretty good discount on CVS that I see. And I believe they pay a pretty nice dividend. So it's a stock that, could provide really good income. I think it has good upside, and it's a stock that it's worth buying into. Again, healthcare has not been doing great for the last 2 years. It's been a surprise for me. Healthcare tends to be a consistent performer and tends to be, not as good as technology over time, but it tends to be, pretty good, like third place, fourth place sector. If you look at the 5-year performance or 10-year, it's right up there, probably in third place. So I'm expecting it to come back to its mean, meaning it's going to start producing what it's done over the last 10 years. All right. So Neil said CVS okay, AMD too. Okay. And then David, CVS closing 300 stores. Interesting. So I'll have to catch up with that story. Wasn't aware that they were closing 300 stores, but that's interesting. Thoughts on Big Five? Man, I got out of Big Five, and the reason for it is, Big Five, I bought it when it was $2 a share. It went up to, I forgot how much, and I made a good return. So I always went back and kind of invested in it, hoping that it would do that again at some point. If you recall, like coming out of COVID, this thing was like left for dead. So I bought shares, and then it skyrocketed, and then there was a short squeeze, and I sold near this $44 price. So I made really good return on Big Five, and that left me with, hey, you know what? I want to own the stock. Just I think it might do that again, and it's never done that. So right now I'm out of Big Five, and I'm trying to get away from kind of too many rebound stories or kind of long shots. I'm happy making a great return on Alphabet and Meta and Robinhood and Airbnb. And, I've got some not quite, like the long shot I'm betting on with CVS or Pfizer is far less risky than Big Five, because Big Five is a retailer, discount retailer. If they have a couple bad events happen, they're bankrupt. They're just a small business, and they don't have a lot of competitive advantages. So I'm trying to find companies that are really operating with competitive moats, companies that are going to be in the green here. Like they just have really good monopoly-like moats, like Alphabet, Meta, to some extent Airbnb. Those companies have few competitors. And I want to stay away because I think that Big Five is really in the red. They are a discount retailer of predominantly sports equipment, hunting equipment, camping equipment, and things of that nature. But they have a lot of competition, and that competition is tough, and they have to lease out expensive properties, hire employees to run their stores. There's just a lot of things there that really suppress profits, and they haven't been growing. So I've been out of Big Five, and I'm probably going to be out of Big Five forever. But I have been a Big Five customer for, a long time, and I'm going to keep shopping there because I think to the consumer, they provide a really good value. So thanks for asking about Big Five. It's always one of my favorites because I made a lot of money on them. So thanks a lot, Big Five. All right. So, we got through all those comments, and I'm sorry if I went a little too fast, but I knew I had a lot of room to cover with all these earnings. Let me slow it down and see if there's any last questions before we shut down the live stream. All right, no more questions out there. All right, just out of curiosity, I'm going to look at a couple of stocks out there. Let's look for NVIDIA. What's it doing? Today it went down 7%, but it's really rebounding after hours, 4%. Wow, that's looking good. Microsoft went down. And what's Apple going to do? So let's take a look at Apple. So Apple, got the wrong symbol in there. So Apple was flat today, and it's flat in after hours. That's interesting. Well, it's avoiding the radar. One interesting news about Apple is they announced that they're going to have Apple AI. The other really interesting thing around that announcement was that they used the Google AI chip as opposed to NVIDIA GPUs, which I thought was a story that should be threatening the NVIDIA whole exclusivity of GPUs. If use cases begin to be known that, hey, you can train your large language models for generative AI on other chipsets that are maybe just as good or close to as good, but for a fraction of the cost, or maybe they're better available, that is a direct threat to NVIDIA, but we'll see what happens. So that's interesting that Apple's kind of holding their valuation. Meta has been, going along for the ride. It's been down when other stocks are down, and it hasn't announced. It announces tomorrow. This is going to be the big one for tomorrow. We'll see what happens there. There was some news where they have to pay $1.4 billion, I believe, to the state of Texas, who sued them for facial recognition. They were storing too much data without people's consent. So interesting. And I think it's around their glasses where they have VR or augmented reality. Can you please explain why you invest in crypto? Absolutely. So the idea of crypto arrived at my doorstep, I guess 6-7 years ago. And, back then I was thinking to myself, what is this? What is it all about? Is it real? What are people doing with it? And in that time, it was kind of a crazy idea, but the coins were being sold for, a very little. Like back here, just 4 years ago, you could have bought coins for 6,000. Now, the reason I buy into crypto is that I think it is a hedge against all my other investments, being stocks, real estate, and bonds, and of course, savings. Now, the whole concept of digital currencies, for me, I understand that it's logical because I've been working in technology for some time. The world has become very digital. I don't think anybody's going to argue with that. We buy so much online. We have so many digital experiences, including, how many hours do we stream either on Netflix or YouTube, which we're on right now? So the world is very digital, but the world depends on what is classified as a fiat currency. Fiat currency being that thousands of years ago, they decided, hey, let's start stamping out coins or printing out money, and we'll use that as our currency. And we've tried to convert it into a digital currency. But you think about international trade. Well, if the company in China is trying to do business with the company in the U.S., which currency do they go with? One side is not going to get their currency. The U.S. company is probably going to say, well, we want dollars, and the Chinese company is going to say, well, we want our currency. Well, digital currencies resolve that. It's a digital currency. And they're doing a lot of interesting things. For example, a barrel of oil is going to pretty soon have a crypto digital unit of measure, which is a barrel of oil. That makes a lot of sense. Instead of converting it to US dollars and then maybe selling it, let's say you sold it in the UK and then you'd have to convert it to British pounds. It's like, why are we converting it so much? It's a barrel of oil. Just sell it as a barrel of oil. And we sell it with a cryptocurrency unit of measure. So those are the examples that make me feel like this is going to be a real space. Now, the market has told me over time that, it was a wise investment to put in a small amount. Like my first year, I invested like $1,000 in crypto. The second year, maybe $5,000. And that's grown really well. For the past year, it's grown at 126%. And that's a great return. And it's a very small part of my portfolio, even though it's had great gains. I'm still not going to put a lot of money there because it's still so young. And I know that the Republican candidate for president has really endorsed crypto and really said, hey, we want to be the crypto capital of the world. And he really made crypto investors feel probably bullish that, hey, if the Republican candidate gets elected, it's probably going to be really good for crypto. So that's another kind of piece of evidence that, hey, crypto is becoming pretty darn mainstream. You have El Salvador that runs their economy on BTC, Bitcoin. And there's a small country, but it's a really nice use case where that's really helped them to tame down inflation and really have a currency that is pretty ubiquitous and universal. So there's a lot of pieces to my reason for investing in crypto. I think I encourage everybody just to learn about it. You may learn and really reinforce your dislike of crypto and say, I still don't want to invest. And now I have more reasons why I don't want to invest. Or you may find something that you find to be, hey, that makes a lot of sense, or I could see that working, and so forth. Investing is about risk taking, not at this point, in my investments, I don't exclusively take high risk. I take logical risk. The higher risk investments, and I would put crypto in the higher risk investments, I really limit and contain those investments. But I continue to invest my time and my learning so that I stay on top of crypto. I only invest in Bitcoin and Ethereum, and I'm in one liquidity pool, which produces upwards of 6% return. And don't ask me to completely explain liquidity pools because I would need about an hour. Maybe I'll do a video on that. I appreciate you asking. And again, I'm not recommending anything of what I say on my videos is never financial advice. I never recommend that you buy any of the investments I talk about. I'm just sharing with you what I do, and hopefully you find it interesting and it's helpful. Okay. So that is that. So guys, we went an hour. I think we covered more than 10 companies. That was a great session. I really appreciate you tuning in. Let me give you a couple of announcements. I'm going to do a co-hosted live stream on Sunday with Scott's Due Diligence. I really encourage you to attend that because it'll be two YouTubers talking about the market, investments, and so forth. It'll be behind this huge week of announcements. I'm going to move the community video conference call to Saturday. So if you want to be on a conference call where you can talk with me and the other investors that attend, look for the notice on the community page and you can attend. You just need to give me your email address. I'll put you on the invite list and you can attend. I started a Discord and it's going really well. Thanks to some community members that encouraged me to do it. We probably have 15 people that have joined the Discord, and the communication, especially this week, has been really, really good, where people really have topics that are very specific to today. And we could talk through that and people communicate their thoughts, which are also really interesting. If you want to be a part of the Discord, super easy. Go to the community page. You'll see the Discord link. There'll be a link there. Just drop in and be a part of it. So all these things, they just cost your time, your interest. And I encourage you to add to the conversation, to add to the community by expressing your thoughts. whether you agree or disagree. I learn a lot from people who disagree with me, and I appreciate any kind of critical comment on a video that I do or a point of view that I'm taking. It may not mean that I agree with you, but I really want to listen to what you have to say. All right, guys. So it's been a great session. Thanks so much for all the views. Thanks for tuning in today. Everybody, good luck this week. This is a huge week. Hopefully stock prices drop to a level where we can buy these great companies and make lots of money over the long haul. Everybody, have a good night.